Yeah, so I'm Willie Newman. I'm the founder and CEO of Homepoint, and Homepoint is a mortgage company. We do business in all 50 states. We originate loans and service loans, and we originate loans through mortgage brokers,
Okay.
solely through mortgage brokers.
And has this always been your channel, or have you been in other
No,
professions?
so I'm gonna kind of give you the startup story. Well, actually, I'll give you my background, and I'll try to move quick because it's a long career. So in the late '80s, my first job out of college was at a small savings and loan. And one of the things that I was tasked with is selling loans to Freddie Mac, and of course, I didn't know what that even meant, but took it on as a project. Ended up selling the loans, and it was really interesting. I really enjoyed it. Fortunately, about a few months later, I met the gentleman that became my mentor in the business, and his name was Stan Rhodes, and he was starting to build a mortgage business and another savings and loan. He had identified that the savings and loan crisis really created an opportunity for a small savings and loan or a small company to really become big in mortgage lending, leveraging what Freddie Mac and Fannie Mae provided to anyone who originated loans who could do business with them. So he saw all this. Of course, I didn't know the extent of the opportunity, but he convinced me that it might be a good thing to join him and build it. And so I did that. And that's kind of where I started kind of more directly in mortgage lending. So this is 1989.
So you were selling mortgage-backed securities then?
That's right. So that's where I started with him.
That's the Jenga scene, by the way, in The Big Short, right?
Well, this was way back, and back then, really, mortgage brokerages were they were more focused on hard money loans. It was just because savings and loans dominated the funding side of the market. So, but again, he had identified that with the savings and loans being in crisis, there was an opportunity to do business a different way. And so
As a bank.
it was a form of bank, yes.
Okay.
Yeah. But again, the focus was very much on mortgage loans. And so back in those days, Freddie Mac and Fannie Mae they were small. So savings and loans were the way in which people funded mortgages, the primary way. And so, like I said, that's what he saw was that was going to change because the savings and loans were failing. There was a crisis. And so, one of the lessons that he taught me was that dislocation is what creates opportunity. So dislocation in the market, step in, kind of look at where you believe the market's going to go moving forward. And what he also saw was that mortgage brokerages are becoming mainstream. So previously, being involved, this is pre-subprime, being involved in hard money loans, very much on the fringes of mortgage lending. But more and more of these loan officers, many of whom worked at S&Ls, and so they were displaced by this crisis. They said, we need to have somewhere to hang our hat and originate mortgages. And so they started forming mortgage brokerages. So you kind of put all that together, and we were encouraging these loan officers to either form or sign up with mortgage brokerages. And we were there to fund those loans. And then we used Freddie Mac and Fannie Mae as our funding source because we were a very small savings and loan. So it's like all of this basically, I kind of look at it like I was there at the creation of mortgage brokers, at least as they're constructed even to this day. So it was a great time to, again, I was 24 years old, so I didn't realize all this was, it was so, I don't know, groundbreaking, but all the same, I stepped into it, and it was a great time, great opportunity to enter the business, and from there, I've never left mortgage lending.
Okay. And in that small company, how big did you guys grow that first company to?
Yeah, it's a good question. So over a period of time, we were bought, and then that entity was bought again. So savings and loan bought by a larger savings and loan, then bought by an international bank, ABN AMRO, and by that's a year 15, we were a top 5 mortgage originator nationwide, and we were a top 10 mortgage servicer nationwide.
Okay.
So yeah, from literally it was a startup that over time became a top 5 lender.
And as they got bought, were you able to sort of gain more and more experience that led you to being the CEO of a company now on the stock exchange?
Yeah, I think so. I definitely learned about how to scale a business, and specifically a mortgage business. And then I also did learn how to navigate larger organizations. And I don't know if that kind of is a direct connection to being a public company, but it kind of gave me the background. I think that is useful in kind of understanding what it means to be public, because both those entities that bought us we are actually a public company, small, and then larger public company. But really what I learned is how to build a scalable business.
Okay. And why did you decide to take your company public? Usually when I think of public companies, I do think of like less control.
So we went public in 2021. A couple reasons. One is our financial sponsor is Stone Point Capital. It's a private equity fund, and any private equity fund, when they invest, they would like to create a path to monetization over a period of time. We are also investors as management, so we're also interested in monetizing the investment. And so when the window opened up for, mortgage companies have been kind of in and out of favor from a public company standpoint. So when that window opened up, we took advantage of the opportunity to step into it.
Okay. And is it going as well as you guys planned?
Well, I got to be a little bit careful because we are a public company, but obviously our stock price, along with many others in the space, nearly everybody in the space, has been challenged because, frankly, we went public at what was probably a peak in mortgage lending, and now we're in a much more challenging environment. So,
but you guys saw that coming, right?
Well, I don't think anyone saw the extent to which the market would change.
Okay. You mean the interest rates rising this fast?
Yeah, how fast they've risen, and I think kind of leaning on my experience, you had an industry that had built up substantial capacity to handle what really was around an all-time high in originations, and now we're going back to origination levels. 2014 is probably a pretty good proxy, and so when you go from that high down to what we're running at, say today, it's an adjustment that the industry has to adapt to.
Okay. Do you think that you guys will be able to adapt to, or has that been one of the
that certainly is the plan. So we've taken a number of actions. One that I'd say most notably is a year ago we were a more diverse organization in that we participated in multiple origination channels. We had our own servicing platform, and you talk about seeing things in advance. What we saw was that in order for us to have the best opportunity to both navigate what we thought would be a more challenging environment, it's been more challenging than the level of challenge we anticipated.
The margins are compressing.
Right, but also we felt that wholesale, doing business with mortgage brokers, that market share was going to expand rapidly because fundamentally, and we've proven this with data, it's best for the consumer to go to a mortgage broker. And so seeing that, we said, let's solely focus on that channel. And so we divested of our other channels of origination or consolidated them. We took our servicing platform and said, based on what we see from a flow standpoint, that's not going to scale. And so we consolidated that into a sub-servicer. Mm-hmm. Fortunately, we were able to transition almost all of our associates to that sub-servicer. So, both giving them an opportunity, but also the continuity as it relates to our customer base was important to us. So we took actions to make it what I would call a smaller, simpler organization in advance of what we saw from a market standpoint. But even then, we've taken additional actions to get the organization to a right size for what we believe the environment will present to us.
I think that I think that you guys are right. We'll continue to grow.
Yeah.
For loan officers who are self-producing and earning their own keep, so to speak, it just doesn't make sense.
Right.
And the word's going to just continue to spread with the internet. So. Right.
Well, kind of the way I look at it is you have a couple different components. One is I think the broker's superpower is choice. And so having a choice of different lenders that a broker can do business with, based on different variables, allows the broker to be entirely aligned with the consumer in understanding the consumer's needs and then aligning those with the best lender, the lender best positioned to fulfill those needs, working with the broker.
And when you say choice, are we talking specifically towards product or customer service needs? Because I always push, and Brad and I had this conversation simply because one of the big things that the broker community always says is brokers are better. I have the T-shirt. So
if you have a T-shirt, it must be true. Right?
It's exactly right. But I got to thinking about, there are a lot of lending institutions that have choice as well, and a lot of them that have a lot of choice. Prior to Finance of America pulling out, I believe that their retail side had offered a ton of choices, even in the non-QM space.
Right.
So is that what you mean when you say choice?
Well, what I really mean is a broker has a choice of lenders, and so, let's say a broker does business with, I'll say, 5 lenders. Each of those 5 lenders will have certain strengths that the broker can lean on based on the situation that the consumer presents to the broker. And so you may say, I'm going to use this lender in this situation. I'm going to use that lender in another situation. Let's say it's a more generic loan. I'm going to allow those lenders to compete against each other so I can get the best possible deal for the consumer. If I look at a retail lender, they only have one choice. Now, within that, there may be a plethora of options within that one choice, but they don't have the choice to pick between 5 lenders. They have one lender, right?
And if their overlays prevent them from...
Right. And so there's less alignment between the consumer and the originator, because the originator has to present the flavor that they have, whereas a broker can go and say, I have this flavor, I have that flavor, I have the other one. It may be product, it may be turn times. Maybe a buyer wants to move very quickly so that they can take advantage of an opportunity that's presented to them for a house. That may cause the broker to go to a lender that's different than if they have a lot of time. And maybe price is the most important consideration. To your point, product features may be most important, and even a retail lender, they may have kind of quote everything, but that it becomes very difficult to manage that as one lender. So when I say choice, I'm really saying that the broker has a choice of different lenders that they can go to match the needs of the consumers that they're interacting with. And we've proven with the HMDA data that results in an average savings of $9,400 per loan to consumers in 2021 for consumers that went to a mortgage broker.
Now, what fueled you? And for those people who don't know, he did one of the largest studies that I've heard of in the industry for the HMDA data. What fueled you to take on that project and to do that?
Yeah, so
and also thank you.
No, I appreciate it. Well, I think so. So in 2018, we made the decision to invest heavily in wholesale, and we saw that wholesale was growing when the market was challenged. So if you kind of go back to my background, dislocation creates opportunity. The market started to become dislocated, and the most efficient channel started to grow. And so we said, at the time we were in every channel, and purposefully, but we were not in any channel. We were not so invested in any channel that we couldn't say, let's pick one, invest heavily in it, and let's manage the rest differently, to the point where we eventually divested of all of them. And so it looked like the broker was more efficient. It looked like the process made more sense to us and the division of labor, but we couldn't prove that the consumer was getting a better deal. It was all anecdotal. And I'm a very analytically driven person from a decision-making standpoint. So it was difficult to make that decision based on there was some data, like the migration of loan officers to broker told us that they're probably mostly rational in their decision making, but we ultimately wanted to prove that it was better for the consumer, because everyone said it, but no one could prove it. And so maybe a little bit later than it would have been nice to know that the HMDA data was as full as it was, but in last year we said we need to figure this out, and we found that the HMDA data has everything you need to figure it out. And so we spent months. The HMDA data, the good news is it has everything. The bad news is it has everything. So you have to figure out how to collate it in a way that produces a result that can be digested by any constituency. But also, you don't want to cook the books, right? So you want to make sure that the analytics are sound and they're consistent and we're transparent about it. So, kind of long story, but ultimately, to me, it's like we made a strategic decision without the benefit of the information that I would normally want to have in order to make it. And so we set upon a journey to prove it out. And it did. And, now I appreciate what you said, because it's taken as the industry standard, which is great, because to me, you want to have a consistent data set that everyone uses.
Yeah.
So there's no argument about where'd you get that? Or, your version is different than my version. It's like,
And as a loan officer, my least favorite question is the HMDA data. So,
I suspect so. But that now the good news is like for all the work that has to be done from a HMDA data standpoint, now there is a purpose to it that we can leverage.
It's now my favorite part. I'm like, get
like,
more,
I should
get
do
more
this.
information.
That's right.
So,
That's right.
And for people who aren't in mortgages, HMDA data is their demographic information.
Right.
So,
It's the Home Mortgage Disclosure Act, and it gives all kinds of information about you as a borrower, not the type of information that would get your identity stolen, but everything about you from a demographic standpoint, from a transactional perspective, such that we can do this type of deep analysis now.
And so there was two numbers that were published that I recall and that I found interesting. One was for everyone, we were about $9,000 over the life of the loan, cheaper.
Yep.
But for minorities, $10,000 cheaper. Why were minorities paying $1,000 more per loan?
No, well, minorities end up getting $1,000 better savings per loan.
With the other lend.
Oh, it's hard to say. I think, one of the things that came from the financial crisis, and at first, it really was a driver of mortgage broker market share going down, was that there were greater restrictions put on mortgage broker compensation than there were on mortgage banker or loan officer compensation at mortgage bankers. And so at the beginning, it was like, can't make as much, don't want to be in the channel. Over time, what it did is that it forced those of us that were stubborn enough to stay in the channel an opportunity to say, okay, well, we're just going to have to be more efficient, and we're going to have to figure out how to do the business at this level of revenue versus a different level of revenue. That is one of the reasons to me why now there is an advantage. So I don't know if I could probably conjecture as to why it might be more expensive the other way, but I do think compensation, the way the compensation rules are structured, has something to do with it.
Yeah, and maybe it's the companies that are maybe a larger subset of companies is capturing those customers.
Yeah. Well, and the other number is that 30% of the loans that were originated in the cohort that we analyzed were originated, were minority homeowners. And so the industry, the larger data set was 18%. And so you think about like both the benefit that provides to kind of the home ownership opportunity for minorities, but also if you look at demographics, there are a number of minority subsets that are the fastest growing subsets, in the country. So from a broker perspective, that's a greater opportunity. It's being presented to the broker cohort.
Yeah. I think you guys said it was the Hispanic community was growing, and there was another stat that I had heard right after you guys presented that said that by 2044 even, that they thought that Spanish was going to end up being a language like English as a primary language.
Really?
Because of the number of Hispanics that would be moving over.
So I hadn't seen that, but to the point, I mean, the demographics are certainly pointing towards more diversity, and so I think brokers are in a great position to be right there to take advantage of it. Was
there a number outside of those three that also drew your attention?
I think the other thing one of the things that we've been advocating is for, and this will be a little esoteric for non-mortgage people, but currently the business that we originate through mortgage brokers, there's a surcharge that's applied to it when we sell those loans to Freddie or to Fannie Mae in particular. And Freddie Mac does things a little bit differently, but ultimately there is a surcharge on all loans that are sold, or the like economic benefit is
15 bips or 35.
That's right, 15 basis points. And so I'd say, and people ask why, and it's super esoteric. It's this capital regime and all that.
It's the same reason my commission's included in APR if I go broker
paid. Right.
So.
And so ultimately, the canned explanation is that the quality is different, which was true pre-crisis. And again, you can debate why and all that, but it's kind of, to me, it's irrelevant, because if you look at post-crisis, the quality is the same, if not better, from the broker cohort versus the retail cohort. So, if you think about why would capital charges be different, it's most typically because there's a different risk profile. and there is no different risk profile. It's like I said, it's the same, if not better. So, that I think that's the other statistic that's important. It's not talked about very much because all credit has been good throughout the post-crisis cycle. But in particular, there's kind of a penalty that's being applied to mortgage brokerages today and wholesale lenders that it doesn't make sense. There's no risk-based reason for it. And also, if we're the channel that does the best job with minorities and does the best job with consumers, why would we penalize for that? It doesn't make any sense.
More importantly, how are we still $9,000 cheaper if we're being penalized too?
Well, there you go. I mean, because that I think that underscores the level of efficiency that's provided.
Okay, so you're saying the cost to manufacture alone might be less.
That's right.
Okay.
I mean, again, if you think about, I look at it like division of labor. So, as a broker's sole focus can be on sourcing customers and then managing that experience with the customer through the lender. Our sole focus, I like to say, and it sounds a little trite, but our superpower is we don't have to manage the loan officer, right?
Fair enough.
Yeah, right. In a retail shop, you have to manage the loan officer, you have to manage the process, and you have to try to improve it in a way that improves the experience. That's hard to do. All we need to do is focus on the experience. What are turn times? What's the throughput? What's the experience with our broker partners? How does that extend to the consumer? We don't have to worry about managing loan officers. And to me, that combined with the compensation structure for brokers, it results in a more efficient execution. And again, 4 years running, you can see it in the HMDA data.
And so I know AIM started the backpack. I saw you were one of the founding donors. Do you believe that data is going to help you guys in your platform fight that?
I mean, it certainly already has from an informational perspective. We are going to do our best to have that translated into action. But the early returns, so to speak, are very good. And I think we're opening a lot of eyes with that. The combination of how quickly the backpack was able to fund, and then the information that we're delivering to the various congressional people.
And
I would hope that results in some action.
Do you need their help to get that tax removed, or can you just go straight to?
Well, ultimately, it's the FHFA that can make the necessary changes. But having Congress on your side is never a bad thing.
Okay. All right. Fair enough. So, do you have anything, hobbies outside of work that help you stay so disciplined?
Not about discipline. Well, I do like to work out. It's kind of like my relief valve. But I'd say more importantly and probably more enjoyable is I have a passion for wine, and I own a vineyard in Paso Robles, California. And so
Looking at
it's a bit of a
2012, 2013 Wine Salesman of the Year.
Oh, really?
So my first job out of college.
Nice. Oh, God. Yeah. So I've owned the property since 2005, and we started the vineyard in 2007, started harvesting in 2009. So it's been around for a while now, and it's a really enjoyable business to be a part of. Obviously, for the fringe benefits are, if you like wine, are fantastic, but also, and especially in the area that I'm in, the camaraderie and collaboration that takes place is great. And
it's a science.
Yeah, well, it's a science and it's an art. I mean, that's the thing. Is that what winemakers will tell you, like the ones who are being honest, is that like they need the raw material. Like they can't take bad raw material and make good wine. It's like they can take good raw material and they can make really good wine, but they can't turn bad raw material into good wine. So and I have a dry farm, which means there's no irrigation, which is pretty unique for California. And so, there's really kind of and it really ties in overall to my business philosophy, which is, I want to try to do something that is not the norm. So we've been able to attract really good winemakers, really consistent buyers. So I sell most of the grapes. And like I said, the end product's pretty cool.
But grapes require a lot of water, don't they?
It depends on how you want to farm. So if you look at Europe, there's no irrigation. Okay. So if you think about where the cradle of winemaking, there's no irrigation in Europe. what the vines live on is they live on in California is the rain that happens in the winter, because I mean, there are freak storms periodically, but it really only rains in the winter in California. And so the whole idea is that the water goes into the ground absorbs the water. My property in particular has a high degree of limestone, which is very porous, so it absorbs the water. And what you want the vines to do, or the roots to do, is work as hard as possible to get that water, because that's what strengthens the plant itself, and that's what ends up creating very concentrated flavors in the grapes. So it's like a whole different concept than what we don't have fancy trellises with wires. They look like crazy bushes. Like you may not even recognize them as grapes until you walk up, like when they're fully kind of out there. But I think the buyers would tell you that the wine that comes from these grapes is really special.
So, do you make your own wine then, or do you just sell the grapes?
So, several years ago, a friend of mine approached me here in Michigan and said, "Well, why don't we do something like start a label?" And so I don't make it. I have one of my buyers make it, but we do have a label that we sell here in Michigan, and it's pretty limited. As far as we only have two places it's sold. But it also gives me an opportunity, obviously, to kind of enjoy the fruits of the labor, literally, in a more consistent format, we'll say, than having to beg the buyers to give me some wine. So
what do you call your label?
So the label's called Tres Son, which is interesting because I have 3 daughters, but my partner in the venture has 3 sons, and so I allowed him to create the label, so he created the label based on his 3 sons. So my daughters, now the name of the vineyard is 4hearts, and that consists of my 3 daughters and my girlfriend. So they get credit, and then his sons get credit, and then ultimately it's like hopefully everyone feels good about how they're referenced in the wine.
Those are good names.
Thank you.
So those are solid names, and that is completely different than when you did Homepoint, because you bought Homepoint.
Right. Well, we bought the entity at that startup. Yeah, this was, but my initial build, and then I did a second build in 2009 of a mortgage business. Both of those were in essence, from scratch.
Oh.
So, yeah, Homepoint was a little bit different because we bought an entity. It allowed us to enter the business more quickly.
Did you buy the vineyard as well then?
No, I bought a walnut farm.
Okay.
And turned it into a vineyard, which is not uncommon out there. I mean, Paso Robles is really kind of evolved from, I'll say, more diverse cropping. Now there's a lot of grapes. So, but I always had a vision to put a vineyard out there. I just accelerated it when we had sold the business I was part of in 2007, and I had a little time off, and I accelerated the vision of putting a retirement vineyard out there, and then I unretired. So, or I went back to work. It's probably a better way to put it.
Yeah, that's. I mean, you can do whatever you want when you have at least 4 startups that I know of at this point in time.
Yeah, I guess the vineyard was a startup, right?
Yeah, I mean, you have your own label and you have a successful farm.
Yeah.
So
now it's fun. Like I said, it's fun, and yeah, we just finished up the harvest a couple weeks ago.
So. Do you distribute your own boxes, or who do you use to distribute here in Michigan for those two stores?
Yeah, so AHD. I don't know if you know them.
I don't.
Yeah, they're out in Warren, I think.
Southern Wine and Spirits had just came in.
Yeah, right. Yeah, I know that name.
Right before.
Yeah, it's a little bit, because of the way we do it, it's a bit bespoke, because, like, distributors obviously usually take the risk of the inventory. My inventory is kind of pre-sold, so they're more like the transfer agent than they are the kind of holder of the wine. Now that said, it does sit in our warehouse for a while, but so we kind of have it designed so that it's not the typical buy my wine and then try to sell it. It's like I already have the places it's going to go. It's just a matter of when it goes there.
Yeah, I mean, absolutely. You have your Homepoint, baby, and now you have your passion.
Yeah, that's right. That's right.
Passion business, is that fair?
Like I said, I always had it more in like a retirement plan, I guess. Not that it's super lucrative financially, but so that's maybe where the passion part comes in. But I'm kind of hyper, and so I always felt like I was never going to be the kind of guy that goes and buys a house in, say, Florida and goes golfing every day. I always wanted to do something that was business oriented, but that was, more fun and, maybe a little less stressful than what we do now. And so that it just seemed like a good idea at the time. And it was a good idea. Then I got busy but we continued to build it out. And now it's 14 years going on strong. And, eventually
4hearts has been going on for 14 years.
Well, the first harvest was 09. So yeah. So
that's impressive.
Yeah.
That's a lot of harvest.
So. Yes, yeah. Well, and like I said, it's like anything. Of a startup, the first couple of years, we were trying to figure out our way. Fortunately, I found a gentleman who he had always been involved in farming. He had never been the lead guy at a vineyard. He was always like the assistant or one of the workers, and he was getting up there in age. And so I said, "Here's an opportunity for you to do something that, I'll be very hands off." From I don't know how to grow grapes, so you're gonna have to, I'll learn, but it's really gonna be your advice and counsel that, with a little bit of my input, that determines what we do. And so dry farming was his idea, the varietals were mostly his idea, and the way we have cultivated the vines. I mean, so since wine, probably one of the most heartbreaking elements of it is green harvesting.
Okay.
Which is when you pick grapes and you throw them away because you want the vines to be healthy, and 2, you want the grapes that are harvested to be of sufficient quality. So the first year I was out, we were doing it. He's like, "Yeah, and I think I was out there actually, and he was like, "Yeah, we just had a green harvest, and you see all these grapes littered across the vineyard, and it's like, that's just money." And he's like, you can't think of it that way. It's like, okay, because to the point, grapevines are very prolific.
Okay.
It just depends what you want, right? You want quality, you want quantity. We tilt towards quality.
That's impressive, because farming in itself, if mortgages weren't a hard enough business, my father-in-law owned a very large dairy farm in Indiana.
Okay.
And so I know how difficult farming is. From his stories. So,
well, there's a variability, especially dry farming.
Yeah.
There's a variability to it that you have to get used to.
Yeah.
And once you get used to it, and if you feel like you have the right people in there, and now I really have a really strong set of buyers, it's been consistent the last 3 years, and 3 of them have been with us since the beginning. So I mean, if you think about it, 14 years is a long time to be buying grapes from one supplier. So I feel like it's kind of I don't want to say dialed in, but to the point. It's like everything's dialed in except Mother Nature, disease. It's like all the stuff that you have no material control over, but that can greatly influence the results of what you produce.
Are there any national brands that use your grapes?
No, it's all, and that's, I mean, we probably don't harvest enough to be attractive to them, but also much more interested in I'll say the quality of what's being produced as opposed to the price it's being sold at.
Have you won any awards?
We've got.
Or have your grapes been part of an award-winning?
I know that a couple of the winemakers have won some awards. What I think probably is more, it's probably easier to reference is that a number of them started making single vineyards. So when they buy the grapes, they can decide, like, they can blend them with others. They can make a single vineyard, and over time, more and more of them are making single vineyard, which obviously is good for our brand. And they have to believe that it's of the quality that will sell when it's single vineyard. The scores that several of them have been getting are like 97, 98. And so, from Jeb Dunnock, who's pretty.
That's very good score.
Yeah.
That's impressive.
Yeah. So obviously that's a combination of
That's what you should bring to Michigan. You'd be in more stores.
Yeah, we don't get Trace-On rated because it's not. I don't think it's big enough. Like, we bring in about 170 cases, or we make about 170 cases a year.
That's a lot of cases.
We're still ramping up post-COVID, but oh yeah, it's
that's a lot of cases.
We try to move a little product.
Good for you.
We drink a little bit. Yeah, good time.
It's that's good for you. So, well, that's exciting.
Yeah.
Do you have any advice that you would give Just for people in general who would start a business, like how would you go and attack that if you're going to start a or if your kids?
No, don't tell me that, man. Whew, I think I've done enough of them. Let's see, I think a couple things. One is, and yeah, maybe people understand this, but this is an issue that we ran into in homepoint. The first two that I did, like I said, the first one, I was the guy that someone else was bringing in. So it's like, startup, sure, why not? And I was young enough where it kind of didn't matter. The second one I did, almost all the people that did it with me had worked with me previously, so they kind of understood what it was all about. This one I had for various reasons, I had a number of folks that didn't work with me previous and had never done a startup. And they thought it was glamorous. And so the one piece of advice I would give, the first piece of advice is, you read the stories about Google and Facebook and all that stuff, throw those all out the window, because being a startup is not glamorous. It is work. And it's not only work in, designing the plan and trying to execute on it, and days where you don't know if it's going to work or not. It's also like you have to do everything. Like, I ended up working at a pretty big bank, right? I had a fancy office. I had an assistant. It's like I came in the morning, my office was clean. It's like you're a startup. It's like you're taking the trash out, you're changing the toner, you're doing the loans when they come in until you have people, you're of a size where you can hire the people that will start to do more of the work. So I think that's one piece is like, don't assume there's any glamour to doing a startup. Know that it is just grinding hard work and there's a lot of risk there. I think the second thing is, though, maybe it's a little bit counter to it, but it's like you're going to have like good days and bad days, and you're going to have ups and downs. But if you truly believe in what you're doing, then, stick to it, because it's easy to get dissuaded by the market or, failures. But I mean, there's a lot of startups that, or people who have done successful startups that failed a couple times before they hit. So I'd say kind of, if you really want to do a startup, it's like stick with it. And then probably the final one, which is no surprise, is like, kind of get the right people around you who have not only have who also understand what it's like to do a startup, but are aligned with you culturally, because culture is important in any organization. But if you have a small organization where you have kind of a cancer in your culture, it's like that's a greater risk of failure than the business model.
Okay. You're the second person this year to talk about culture. What does that mean to you?
I think it's kind of like when people come into work every day, it's how they operate, how they interact with each other, how they treat each other, how they treat their constituents, whoever they are. In our sense, or in our business mortgage broker partners, the capital markets, the people, capital markets, et cetera, all those, our vendors, all those constituents. It's really how you interact and how you treat people, to me, is kind of what culture is all about. And so, like I said, I learned in my first startup, I learned about culture. I just didn't know that's what it was, and we weren't deliberate in how we built the culture. It just evolved. Fortunately, evolved in a positive manner.
How can you focus in on building a culture?
I think from day one, be deliberate about defining what the culture is. And we've had a couple different versions of it, because like I said, in a startup, it's a little bit different than as you get to become a more scaled entity. Because in a startup, it's like I kind of knew everybody, even though I didn't know them. It's like you literally maybe know or see each other every day. So that culture is very kind of, I don't know, it's like a
pre-built.
Yeah, well, there's not a lot of chance for kind of variation. Now, individuals may come and go a little bit, but kind of how you build it and how you communicate it can be very consistent. As you get larger, it's no longer about me. It's about how do we extend we call them principles and stakes. So principles are me, it's kind of my principles, translated into business terms. And then the stakes is how you operationalize those principles every day. So we have 5 principles, 12 stakes. And that's kind of how you be deliberate about it. We took a large group. I said, here's my principles, translated to business terms. You guys figure out what the stakes are that will allow our associates to understand them, even though they don't know who I am, and they don't, they wouldn't know how to translate it. And so that to me is how you're deliberate about a culture, is like you have an idea up front of kind of your philosophy, and then you extend it out in a way that can be translated, whether it's your line level leaders, whether it's your associates, how they interact with each other every day and how they interact with our partners and kind of other constituents every day.
So homepoint's got roughly 2,000 employees, right?
A little bit less than that, but yeah.
Yeah. Okay. And how many does your vineyard have?
I have one. I have two contractors who are kind of connected to me, and then everything else is contract labor. So I have.
How do you do culture with contract labor?
So I depend on the two people that are like. So the one is the gentleman I had mentioned. The other one was kind of mentored by the gentleman I mentioned. So
it's a weird industry. It keeps happening.
Yeah, right. And so what I did was I basically said, here's what I want. And here, and they came back to me and said, here's how we can do this. And so we kind of established that culture there. And what we do with our contractors is we pay up so that we can select, because I don't even want to go into the labor situation the last few years, but it was important for us to have as much continuity as we could in the labor force that comes into work, because there are some, they can be somewhat transient. So we've just tried to maintain as much continuity as we can, understanding there's going to be some turnover, but it really all starts with the two guys that are there.
Okay. And so would you say culture is as important with a smaller company as is a bigger company?
Yeah, well, I think being consistent in the culture and making sure that individuals are aligned with the culture, I think it's more important in that the cost of having someone who's not aligned can be far greater in a smaller company. It can ruin the company. Whereas in a larger company, you may have, let's say you have, 10,000 people. You may have some people that are not aligned. At some point, if your systems work right, they'll either get aligned or they'll be selected out somehow. Because it'll just almost reject. The organism will reject the fact that there's these. The white blood cells will reject the fact that there's something foreign in there. In a smaller company, it's like one person could burn the place down.
Yes.
Maybe that was too literal. I don't know.
No. We've only ever lost new people, but the same. Christian's been with me from day one.
Yeah.
Everyone on our team's been with us for 3 years now.
It's great. See, that continuity. That's what I mean. It's like.
So when people are talking about culture to me, I'm like, we didn't really work on that too much. But obviously, we're doing something wrong.
Neither did I up front. No.
So.
But what I would suggest is that you do think of a little bit of, if you want to be bigger, you think about, you try to distill what your culture is, because everyone has a culture. Every company has a culture, whether they define it or not. It's just a matter of what you do kind of purposely to understand it and to try to extend it out. So it may be in a small company, it may not need to be communicated because you're all together every day and you hang out and you kind of got it figured out. But if you have designs on being larger, you might want to spend a little time saying, okay, what is our culture?
Okay.
And I can tell you the first startup, like I said, when we didn't really define it, the reason it was so, kind of looking back, the reason I think it was so strong, because we were so focused on one goal, which is we're going to do business with brokers, and brokers are going to grow. And it's like that made, and we were all young and we, probably full of ourselves, but it was we were all so focused on the same objective that the culture formed around it, and it just made us all very close to each other. Now that's probably not as expandable as saying, okay, I have principles and I have stakes and I can communicate them. Everyone gets indoctrinated and want to come on board, and but it worked pretty well. So, like I said, you have a culture. You just, if you are interested, you may want to spend a little time thinking about how to define it in a way that you can communicate it to others that come into the organization.
Well, I'm interested in it, so
yeah.
It's something that I've been thinking about since it was brought to my attention. So we actually had that conversation, Christian and I.
How do you establish culture with? I see a lot of your employees work remote.
Yeah.
Christian asked how you establish culture with your remote employees.
Yeah, so it's a challenge, and I'm not going to sit here and say we've perfected it, but what we do is try to maintain consistent communication at the organizational level. So actually later today we have an all hands meeting. We do this now twice a month, in part because we've reconciled to the fact we have we're going to have a large remote workforce for some extended period of time. We're increasingly bringing back those that were kind of sent remote because of COVID. They're coming back. So that makes it a little bit easier, but it's frequent communication and then working with our leaders to help them understand how they need to stay connected to those that are remote. But it's harder, there's no doubt.
Do you think it'll be better for your organizationally from a cost perspective to have them on remote versus, say, having a larger office as you guys continue to grow?
Yeah, I mean, there certainly is some kind of overhead benefit to having remote. The reason we did it is it was access to labor. So, both from a skill set standpoint and because in our high growth period, everyone was hiring, right? So we said we need to cast a wide net and we need not to be constrained by our sites in order to get high quality resources. In hindsight, I probably would have wanted to do a little bit less of that and a little bit more of local. Because I do think there's great benefit to having people together. Again, not forced march 5 days a week, but we see it even yesterday. We now that we have our return to office defined, the main day here in Ann Arbor was yesterday, and it's a whole different dynamic. And I've gotten notes from people who said, "I'm doing a better job when I'm together than I am when I'm apart." So yeah, I mean, there's certainly kind of the financial consideration, but there's also the cultural consideration, strategic consideration, performance considerations, and I think the world's still trying to sort out what the value of all those are, in every business, I think.
Yeah. Do you foresee which way you'll go? You think you'll stay on the remote path, or do you think you'll start trying to bring some people in key people in that need to be brought in?
Yeah, well, so where we've gotten to is that if you're coincident to a site, so for us it's 30 miles from a site, you will start to come in, and like I said, it's not a forced march. It's not like now 5 days, but we do believe that will happen with increasing frequency, and we'll balance it out because, one of the things that we realize is that people have adapted their lives over the last 2.5 years to being remote. So childcare, whether it's childcare, travel, or driving, kind of doing the stuff that you have to do. It's like there are certain considerations that we're cognizant of. But I think for me, we have great remote people. Many of them worked remote their whole careers, and we're by no means are we interested in saying you can't be remote because they're great. But that said, my preference is to get people back together, and we're going to figure out ways to try to get remote people, whether it's kind of remotely together or maybe even in person together at some kind of frequency. I think that's what we're focused on.
I found great benefit, and we just got our first office, and I found great benefit in having that, and that's how this podcast came to be.
Right.
They started showing up every day, and I was surprised because I know they worked hard from home, but I was surprised how much more, and I asked them, and they both were like, yeah, we like it better.
Right.
So.
Yeah.
I think at home you get reminded of how much stuff you need to do around the house.
Yeah.
So.
Well, I think people adapted people kind of convinced themselves that remote is okay. And when they get back together, they realize they were missing something. They just kind of forgot they were missing it. And then once they get back together, it's like, oh, I like being together with people. Now, again, it doesn't mean 5 days a week, forced march type stuff, but it's like there was something missing. And I think, like I said, that for me, the thing that was especially supportive was when the person who sent the note to me has been with me in all of my various startup iterations. He's been part of it, and he was the one who told me. So I performed better this week than I did last week because we were together. And it's like I want people to be happy about it, and I want people to perform better. And it's like, what could be wrong with that?
Well, hopefully you don't experience what Google and Apple and some of those other tech firms.
Well, again, yeah, but if you look at the other, it's kind of like you're going to do it this way, and it's like we've been,
they definitely could have delivered the news softer.
No question. I mean, that's like a whole different podcast. Is the level of arrogance some companies have, right? But we've been probably a little bit timid almost. Like I pushed our leadership to get to this point, and so whether that's right or wrong, I don't know, but
You'll
But
find out.
I think you have to be considerate of what the like I said, the changes that the associates have made and how they kind of live their life. And so as long as you're understanding of that, and then they get that experience that says, wow, this is cool. We're now, we're opening it up now where they can on a voluntary basis come in more days. So then eventually we may make that mandatory, but it's like, let's see how many people come in.
What about as you like hire new hires, right? So will you just, hey, you're in office and does that change how you? Because
Well, I guess for better or for worse in this environment, we don't have a lot of new hires. So, I mean, it's a little more replace than new, but kind of a high volume of new. But I think that will evolve. I don't think we're kind of fixed to a particular thing. I think we do a preference to hire where we have a site at this point.
Yeah.
Because again, we don't have there's not a lot of hiring going on, so we can be a little bit more selective and a little bit more kind of thoughtful.
Housing market's booming. Don't worry.
Yeah, right.
It'll grow. 4.5 million homes behind. That's what I keep.
Well, there's no question the demographics are in favor and the long-term outlook is good, but in the interim, affordability becomes a big blocker to having a lot of homes being sold.
So as a broker, so business-wise, you gave that advice. If somebody was to come in and want to be a broker, how would you recommend they scale their business as somebody who's done it now 3 times?
Well, I think your first decision point is whether you want to form your own brokerage or come in and kind of learn the brokerage business through another broker, and then potentially spin out and become your own brokerage. And so I think that's kind of I would be thoughtful about that decision because, like I said, as small as a brokerage may be as a business, it's still a business and it's still a startup. So be cognizant of the work that's involved with that. Now, fortunately, us and others can help with that, but
they're very, very good to help, by the way.
Thank you.
Your team was awesome to work with to get that going.
Thank you. Yeah, so I think that's the first, and it may make more sense for an individual to come in and learn the brokerage, learn what being a broker is all about, working within a existing brokerage, and then decide.
Did you ever sell loans to consumers, or were you always a wholesaler?
So the business itself. So we as I mentioned, we had every channel of origination at some point in time.
Okay.
And again, it wasn't apparent when we started in 2015. It wasn't apparent that wholesale had the efficiency. Like the advantage of wholesale wasn't apparent at the time because, if you recall, market share had shrunk so significantly from the peak pre-crisis, and it was starting to grow, but not that materially. And so we didn't want to say, automatically, wholesale's better. Like I said, I really wanted more data and more kind of market observation first.
It was smart.
Yeah, I appreciate that. So we had the company we bought had distributor retail. We added a couple call centers for new customer acquisition. We had wholesale. It had wholesale. So we had that. And then we bought Correspondent through another acquisition. We also bought a servicing platform. So we had everything. We were covered. But we didn't invest in any of those channels so significantly that we couldn't divest of those channels. Like, in other words, we weren't dependent. And in 18 is when we made the decision because we saw the ramp in loan officer transition to broker and said, there's something here. Market share was growing, but it's kind of one of those things where if you believe that the broker's superpower is choice, and if there weren't enough choice, we didn't think there were enough choices. And so we said, we can be another choice that is of a size that will give more loan officers comfort that being a broker is a good thing to do. So yeah, I've never been an originator though. I started in the market.
We started on the opposite ends of the track.
I know. Well, what I say is I learned the business back to front.
You came. That's sort of your original job is usually that's the job that somebody gets who has been with the company for a very long time and has like established relationships.
Yeah. Well, my mentor, he took a chance, so I appreciate that.
Great one.
Yeah. Thank you.
That was a good call. The thing that I was trying to get at though was like, I always assume that people who are going to open their own brokerages have at least experience with mortgages. Mm-hmm. So when we came in, we came from a lender who was direct to consumer, and then I had to learn how to go introduce myself to realtors.
Right.
Luckily, I sold wine and spirits and was used to getting told no a lot. And so that was not new to me, but when I'm reading on the forums and watching newer brokers struggle a little bit, that's where I see them struggle, is earning business or market share in their areas. And that's sort of what I was going to say, is like, how would you strategically plan around that?
Well, I think,
and if you don't know, that's perfectly fine too.
Well, I think if the transition from DTC to being on the street, it's like, again, I think it's eyes open, right? It's like, know that you don't know things, and you haven't experienced things that you need to experience. I've heard that multiple times, but I think you have to be aware that it is different. Like you said, there's a lot of hard work. You got to go earn trust, and you're getting a lot of no's before you get yeses. Whereas call center, you may get no's, but someone's feeding you the way to get to yes, right?
There's 100 more no's behind it.
Exactly. So. It's like, bring it on, because sooner or later I'm going to hit something here. So, but I think like anything, it's like eyes open when you go in. And in that instance, I think working with an established brokerage that has experience in something that maybe you don't, it seems like a more logical path.
Okay. Absolutely.
So we just hit an hour of the podcast. Just want to let you guys know.
All right.
I just have one more question.
Yeah, sure.
You probably get asked it a lot. I like the Godfather movies quite a bit.
Me too.
I want to hear how you got that hell of a nickname.
Oh gosh. Well, I think it's because, like I said, I was there at the creation, but also I do think that people know that my two favorite movies are The Godfather and Saving Private Ryan. So maybe people know that too, but I think that idea is that I was there at the creation, back in the late 80s. So
okay,
I'll take it, right?
Yeah. That's a good one.
Make an offer they can't refuse.
I really appreciate this.
Yeah, no problem. That was fun.
Yeah, thank you.
I hope you got some good material.
Yeah, I think